So good afternoon, everyone. Thank you so much for being here with us. We have a very exciting conversation for you this afternoon on scaling climate finance through innovative capital market solutions. We have a first-rate panel with us here today. And, I'm going to start by stating the obvious. The needs are huge if we are serious about dealing with climate change and sustainable development. And the resources available and the capital available is scarce. So unleashing the power of capital markets will be fundamental. And this will call on innovation, on boldness, on risk appetite. As of late, we have gone through a period of time of significant innovation, from labeled bonds to outcome bonds to cat-linked bonds to hybrid capital to portfolio guarantees and whatever else we can come up with. Before we go into this panel discussion, and I will introduce our panelists later, let me please ask Axel van Trotsenburg, Senior Managing Director for Development Policy and Partnerships, to kick us off in this important conversation. Thank you, Axel.
Good afternoon. Thanks for this important discussion. We have been having here in the last couple of days already a lot of discussion, and you just summarized actually already, is that the needs are enormous and financing we haven't solved. And here we need actually to reflect, namely we need to do both sides. We need to have our ability to scale up, because once you have the financing, you have also to deliver. And I think that is what we have to do at the World Bank, is having the financing, but clearly also having an incredible change towards also climate financing. And I think over the last 4 years, you have seen a good development that has seen the bank group doubling its climate financing. We're now at 38 billion. That's about 25% higher than the year before. And also renewable energy projects are increasing by 20%. So that is good, but it's absolutely not sufficient, because we need to do more. And I think here we need to reflect how we can get the financing. This is for multilateral financing to look in oneself. I think we have actually done quite a bit. I mean, Jorge, you just mentioned it, but let's keep in IBRD. We have basically $21 billion in paid-in capital. Yet we did something close to $900 billion in lending over the last 75 years. I think the IDA 18, the transformation package, where also Alexia was key for, has transformed the entire financing. These are important steps, but is it enough? And so where we have been good is to reform things and tapping into capital markets. Where we are still challenged is to get the private sector in a massive way. And that is clearly for the middle income country, the IBRD, but I would certainly suggest also that the panel is not to forget the low income countries, and particularly Africa. And here are then the things how we need to think on getting the private sector. A couple of days ago, I thought a very exciting project went to the board, namely an envelope of about $5 billion for electricity access in Eastern and Southern Africa. And we have a first down payment or approved from the board of $1 billion, but we would like to mobilize $10 billion extra. With the explicit goal, and therefore I come back to the project, is we want to see can 100 million people can get access to electricity by 2030. That's our goal. And here we need to mobilize. And here we probably need to de-risk. That partly is done through a private sector window, but it is far from enough. And therefore, I think that is the debate what we need to have. We need to push each other probably into the discomfort zone. But I think it's the only way, because I think, as Jorge has said, that these resources, we can be successful, and hopefully also IDA 21 will be successful, but it will not be enough. And that is where we need to get the private sector. So I hope you will have also a great discussion. At the end of the day, these discussions have to be translated also into action and see if we can challenge the private sector a little bit more so that we get the billions that we need. So thank you very much.
Thank you so much, Axel. Thank you so much, Axel. Let us show a brief video, and then we will go to our panel conversation.
The World Bank is the largest source of sustainable development finance and knowledge for developing countries. Our mission is to create a world free of poverty on a livable planet. The World Bank helps member countries improve education, healthcare, and nutrition, ensure access to food, energy, and water, and make energy, transportation, and agriculture more sustainable. We are focused on purpose and impact. The World Bank stands with countries when challenges arise, when countries need to defy expectations. The World Bank helps countries build resilience, when countries need to adapt to a changing climate, and to recover and rebuild from the devastating effects of climate change. As countries are creating markets and opportunities, when countries need a partner for the long term, World Bank stands with countries so everyone gets a chance at a better, more dignified life. When countries look to the future to expand horizons, the World Bank stands with countries in times of crisis, challenge, and opportunity. We are the World Bank, the world's bank. By investing in World Bank bonds, you invest in a better future, all.
As you see, we never lose an opportunity to sell World Bank bonds. I mean, Axel mentioned it, $20 billion in capital, and we have gone to financial markets, raised $1 trillion throughout our history, and lent $830 billion to emerging and developing countries for sustainable development. Let me now introduce our panel. First, we have Kitty van der Heijden, Deputy Executive Director of UNICEF, Kampeta Sayinzoga, Chief Executive Officer of the Development Bank of Rwanda, Asbjørn Andersen, Senior Portfolio Manager for Believe, and Alexia Latutour, Secretary for International Trade and Assistant Secretary for International Trade and Development of the U.S. Treasury. Thank you so much for being with us this afternoon here. And why don't we start with you, Kitty? You know, a few years ago, it was a few weeks ago, UNICEF and the World Bank partnered together for a very innovative, our very first and very innovative outcome bond. Can you share a little bit about that experience with us?
Yeah, let me begin where it started. And that was really the realization that business as usual just doesn't cut it, right? If you look at climate change, if you look at how far behind we are on the SDGs, and you look at how many crises are compounding the difficulty to reach the SDGs in 7 years, we know that we have to scale up, we have to accelerate. And business as usual also in the funding just won't work. So one of the things we did, and thanks to you, Jorge, because it was your leadership that actually brought us there, was really trying to see how do we get more from the market, from the private market. And so this was the first bond that was ever issued between the World Bank and the UN for 100 million, out of which 50 million came to us in UNICEF. And we invested that in emerging markets to do private sector fundraising. Now, that was issued in 2022. It took a long prep time, but it was issued in 2022. And just to say that within a year, we have fully repaid because we know how to invest. We know that we can do this. And strips from coming from the, and so this type of new financing, buying in and bringing in private sector capital from emerging markets, not just from the traditional donors, that is what allows us to go faster, to go further, and to reach the last mile. So it was actually thanks to you that we made it. And I have more initiatives up my sleeve, so we need to keep talking.
Looking forward for more of this. Look, we have a large funding program, and we try to take advantage of this funding program to further our development mission. And I think that this partnership with UNICEF is a great example. In fact, it was the very first outcome bond that we issued, but it has opened the door to a series of innovations that we will be talking more about during today's panel. But Kampeta, why don't we go to you? BRD just issued its first sustainability-linked bond. Can you share with us, why you chose to go in this direction?
Well, thank you very much, and thank you for having me. In his introductory remark, Axel mentioned, the importance of making sure that we have solutions that fit Africa, and I'm very proud to be here today because Rwanda is a low-income country, but it's also a country that has managed to innovate. The Development Bank of Rwanda is our national development bank, which I lead, and which has a large portfolio of the World Bank. We manage about $500 million of the World Bank. And how it started actually was a conversation with a country team back then to say, we tend to spend IDA. What if we didn't spend IDA? What if we leveraged IDA? And what if we average, or normal IDA dollar, we could leverage maybe $2 or $3 from the local markets. And in Rwanda, the capital market is not very deep, so that's also challenging. And more specifically, as BRD, we had never done a bond. So this was our first bond as BRD. It was our first bond using IDA as a partial guarantee, so underwriting by IDA. And it was the first time in East Africa that there would be a bond that is sustainability linked. So a lot of innovation, but the idea really was to say, how do we tap into the local liquidity, create an incentive for the market and for BRD, but without distorting the market? That was very important for us so that we could keep going back and keep having a good result. Number two was, how do we bring the other financial institutions on board, either through the KPI that we set or as investors, because it's very clear, as mentioned by many partners, if we want to get where we need to go, we will need to bring the private sector on board. So they need to be incentivized, they need to understand, but we also need to use our development banks to convert, my board chair says corrupt, but I prefer convert other financial institutions to understand that this is the way to go, sustainability is the way to go. And then what we did, and the last bit, which we rarely talk about in this forum, is really the pricing. Because one of the big issues that we have is when you look at the rating of the credit agencies for a country like Rwanda, the end pricing for the final SME tends to be exorbitant. So one of the innovations that we managed to have with this bond, and I can talk about the features later, was to say, how do we invest the 10, and it was a 30 million bond in local currency with an underwriting of $10 million from IDA. And we said, what if we invest the $10 million from IDA into local assets, not pocket the interest income, but reinvest the interest income to make the cost of borrowing for the final clients actually lower. So with this bond, we're able to, one, raise our first liquidity outside traditional credit lines, two, have a credible bond because of the underwriting from IDA, three, lower the cost of borrowing for the SMEs, and four, show the market how sustainability-linked bonds actually work and incentivize other financial institutions to do the same. So it was exactly what was said in the introduction. We managed to bring scale from $1 to $3. Usually would have spent that one IDA dollar. This time we could leverage 3. We're able to galvanize the local private sector, and we're able to have a demonstration effect in a challenging environment, to be honest.
A fantastic story of success, Kampeta, and we will have a chance to go into more details on this. But Asbjørn, let me go to you. We've talked a little bit about outcome bonds, our first one with UNICEF, but then we issued a Rhino bond and then a sustainability-linked bond. You were one of our first investors in one of these bonds. Can you share a little bit about that experience?
Absolutely, I'll be happy to. But maybe first, so I'm from Valley Pension. I'm sure not many of you know that. We're one of the largest pension funds in Denmark. We have around $50 billion on our asset management. And we have invested in 2 of the outcome bonds from the World Bank. the Rhino Wildlife Conservation Bonds and emission reduction link notes. So we're very happy about those ones. And specifically about the emission reduction link bonds, if we dig into the structure of those, the World Bank has provided a guarantee of the principal. So the World Bank will invest that money into normal World Bank projects. And then you will pay an interest on that. But the structure is that that interest is not going to us as investors. Instead, that is converted to an upfront payment to the project developer. And then instead, investors will receive the carbon credits that is generated by the project. So it's very much linked to that. And if we dig into the, I guess the exciting part of the bond is the actual project, then it's going to finance 300,000 water purifiers to be distributed in Vietnam. Around half of children in Vietnam don't have access to clean drinking water, so they actually boil water to clean the water for safe drinking. And with these water purifiers, they can stop burning biomass and of course reduce carbon emissions. And they will be able to go to school instead. So it's a very good story with a significant impact, I think.
Thank you so much. So again, interesting structures, bonds in which the principal goes to support sustainable development projects, World Bank projects, and the coupons, instead of going to investors, go to fund another project. If the project meets the KPIs, either a donor or the project will generate the payout for investors. So, you know, lots of creativity and ideas that can come together with these structures, and we will talk more about the future of this market. Alexia, can you share with us your ideas and views on the Clean Technology Fund and how we can catalyze it to do more going forward?
Of course. Thank you so much, Jorge. Thank you, Axel. It's great to be at the World Bank Pavilion. So I'm going to zoom out before I get to the Clean Technology Fund and just talk about the climate investment funds, because the Clean Technology Fund is the largest component of the climate investment funds, or the CIFs, that for the United States are just a critical part of the broader landscape for climate financing, or what we often call the climate finance architecture. They are a critical piece of the solution for countries that are looking for a range of financial instruments, various levels of concessionality to be able to meet their climate goals. And alongside the Green Climate Fund, the Adaptation Fund, and the Global Investment Facility, we really think that these four together are a big piece of the solution for countries. There needs to be some work, I think, to make what is sometimes a complex architecture a little bit more simple and to improve the ease of access to the funds for countries. We can come back to that if necessary. And the CIFs are also quite unique because they work exclusively through the multilateral development banks. So they're able to leverage the infrastructure of those banks to speed up project development and implementation, as well as the expertise of the development banks. So within the CIFs, we have the Clean Technology Fund, which was established in 2008. It has 9 contributors, so sovereign countries that contribute to it. And it has the mission to help apply low emissions technologies to help countries mitigate climate change. And I think particularly for countries where access to energy is a real challenge still, it's vital to have these new technologies available to them to leapfrog as they're trying to do 2 things at the same time: increase access to energy, but do it in a clean way. And the CTF is very powerful in that regard. Also very powerful in terms of working through country-level programmatic platforms. So you have that coordination at the country level across players, and the CTF helps to facilitate that. And then finally, for the United States, we have found the CTF to be a very strong partner in the context of the Just Energy Transition partnerships that you may have heard about. These are pretty ambitious, radical collaborative models that help big emitting countries like South Africa, like Indonesia, transform and accelerate their energy transition. And the CTF has been a critical partner in those countries as well.
Thank you, Alexia. Kitty, back to you. UNICEF's new Today and Tomorrow initiative is a new approach to addressing the growing climate and disaster risk financing gap for children and young people. And can you talk about this program and how the private sector is supporting this?
Yes, I can, but I just wanted to, because I was very inspired also by what Kampeta said, and it reminded me that I actually forgot one really important detail about our bond. And that is that with the investment of the bank, we were actually raising the same amount of money as you. So 1 to 3, you put in $1, you get 3 out. That's the type of multiplier we need to accelerate climate investments that are child friendly, right? And so it's the multiplier that also makes the big difference. And I'd forgotten to talk about that. So what Today and Tomorrow does, it's actually the first climate risk insurance with a specific focus on children. So for me, there's two things. One, we really need to ramp up climate finance and leverage the private sector, but we also need to make sure that investments are much more child friendly. Now, what comes out of the multilateral climate finance, we did a mapping. On average, about 2.4% of all those investments are child responsive and child sensitive. But we know that 50% of the children are at extreme risk of climate, right? So it has to be more, but it also has to be programmed in a different way. And so Today and Tomorrow has two components. One is really investing in adaptation in 8 small island countries to make them sort of more disaster risk resilient. That's the Today component. And the Tomorrow component is a cash insurance system, a parametric system that when cyclone winds hit over a certain wind speed, there will be an automatic cash payout to these countries so that the economic shock is much less and children suffer much less. And I don't know whether I should say I am happy about it or I'm not, but we have in 1 year time in 5 countries paid out more than 3.7 million, which means that we've had a significant number of cyclones hit. So the system works, but it shows you just how much need there is for this type of immediate cash payout after climate disasters. So that's the Today and Tomorrow, funded by, among others, the UK and Germany. Really innovative, and we need to scale that type of system with more investments.
This is interesting. And then there are also capital market solutions that can come into play, and maybe there is space for us to partner. The World Bank also issues cat bonds. I've been warned that I need to be careful when I mention cat bonds in conversations like this, because I just mentioned the rhino bond, no? So the question that follows usually is what kind of cats? And no, cats are catastrophe bonds. And it's basically a World Bank bond, which on top has a parametric insurance that pays out to countries in case a catastrophe happens. So maybe there is space there to partner and use the capital markets to catalyze more resources precisely to protect children when disasters hit. Kampeta, so can you share more about the results of the sustainability-linked bond?
Yes. Let me cut to the suspense. It was very successful. Bond was subscribed at 110%. My biggest fear when we started the bond was, will they get it? And they got it. But how we started, and maybe I should have started there, was actually a conversation with your team, Jorge, the World Bank Treasury team, advising us on how to structure the bond to make sure that the local market understands it. And how it was structured, it was a 7-year, the tenor was 7 years for the bond. It was 30 million in local currency. It was, as I said, underwritten at the level of 33% by AIDA funding. And why was it different is because we actually used a step-down approach. So what it means is that we had 3 sets of KPI, and I want to focus on the first KPI. The first KPI is that BRD committed that by 2028, 75% of its clients, which are mainly financial institutions, would have operational ESG frameworks that are actually in place and working. And that was the most, I would say, appetizing KPI for the markets, because we committed with the support of the World Bank to make sure that not only BRD becomes ESG compliant, but actually 75% of all our clients, including some of the largest banks in the market, become ESG compliant. Now, that framework was stamped by Standard & Poor's to give credibility to the KPI framework. And we have committed, of course, to make sure that by 2028, a second party, an independent party, actually verifies that we've met the KPI. And if we have met the KPI by 2028, we'll have a 40 basis points reduction in the coupon rates that we'll be paying as BRD. So that was the part where we were wondering, will the local banks and pension funds understand the step-down approach? Because of course it's a reduced return on their side, but they loved it. For them, it was a good middle ground between an incentive for BRD and not too much that they feel that their return on the bond is compromised. So we managed to hit just the right sweet spot for the market. And when I look at the investor base of our first sustainability-linked bond, we have 30% pension fund, 30% banks, 7% insurances, 7% retail, a lot of retail. We got more than 100 investors retail. So it shows you that the investor base was very diversified and the message resonated actually across the market.
I think that this is a great story, and a great story on investors more and more say they want to create positive impact, and it's great to see them put their money where their mouth is.
Definitely.
And in this vein, Asbjørn, we've been talking about outcome bonds. You have been great partners to our outcome bond issuances. Is this a cute one-off thing, or are we talking about something that can be scalable?
I definitely hope it will not be a one-off. I hope it's the start of something new that can be scaled. As you might know, the World Bank issued the first green bond back in 2008. That was something new. Now we have developed a complete framework for that. So I definitely hope there'll be more to come. But Jorge, I guess I'll hand it back to you. What's in the pipeline? I think there was a press release yesterday. Is that correct?
There are quite a few things on the pipeline. Yesterday, Citi announced that we have asked them to work with us on the next outcome bond. This is an interesting one because it relates to plastics. It relates to collection and recycling of plastics, which is also a major challenge that we are all facing. And let's see how it goes. We hope that we can hit the market in the coming weeks. That's the next one. But we have others in the pipeline as well.
That's good. I'm quite confident it will be a success.
Thank you so much, Asbjørn. Alexia, so going back to CTF and the ambition for the future, what's the role that the private sector and capital markets can play to to scale this up and to catalyze the efforts of CTF further?
I think there's a great role, and I'm really excited by work that CTF is currently doing to help expand its funding model to be able to tap into capital markets. And so the CTF has reflows that comes from countries or project sponsors that are repaying their concessional loans. And the idea is to leverage and use these reflows to be able to issue bonds to the market. And our sense is that that could create the possibility of $500 million in UK additionally that CTF could have to be able to work with countries. So that's really exciting, so that CTF would not have to only depend on donor contributions. Now, a word of caution here, donor contributions will still be needed because some of the work that CTF does, particularly, for example, linked to resilience, is grant-based, right? But for loans, for example, we could then use the bond. So this is super exciting. It has the potential to make the CTF, I think, the most financially efficient fund out there. And I think the other funds will be watching very, very carefully. So we're very excited about this. And we think that CTF, because of the model that I described earlier of working through the MDBs, is the perfect place to test out this approach, because the reality is there's a great track record of a portfolio of MDB administered loans with comparable credit quality, and that should be of interest to our friends, from the private sector. And so I think others will definitely look at this model in the future. And I think this is very coherent, Jorge, with the innovation that we've seen from the World Bank and from you and your team in particular on a number of fronts. So this bond issuance, very exciting. You mentioned in your opening the guarantee platform. The U.S. has been very happy to make a request to our Congress to be able to contribute to this new reform guarantee platform. And just to give you a sense of the leverage, about $750 million could then unlock up to $25 billion of IBRD lending. So the leverage is very tempting to a government that has to contribute, with the benefits, of course, for the recipient countries, but also hybrid capital. So maybe, Mr. Moderator, if I can throw a question back at you, can you maybe tell us a little bit more about some of these other innovative tools that you've been developing?
Oh, thank you so much, Alexia. Moderators usually don't answer questions, but I'll do an exception this time because, hybrid is a very interesting concept. We put together 3 simple ideas. So simple, individually, that it's almost easy to take this for granted now, while at the same time, it's a very significant innovation. Hybrid capital, which exists, and it's issued by commercial financial institutions all the time, debt that has certain characteristics that allow it to be leveraged. The second one is the commitment that our shareholders have to the World Bank and to our AAA, the realization that the AAA is fundamental for us to deliver on our mandate. And third, the fact that resources, when it comes to development, are flowing more and more to certain topics. So we put these 3 ideas together. We are going to issue hybrid capital for shareholders and development partners. Given the fact that there is this commitment to our AAA by our shareholders, we will do so at funding cost, and hence there will be no increase or negative impact on the pricing that we offer to our borrowing countries. And what will happen? Every dollar invested through hybrid will translate into $8 that we will be able to lend to member countries. So talk about the power of leveraging. And then the third concept, we will give shareholders and development partners the opportunity to preference. This is a conversation that is still ongoing. So, I cannot guarantee that we will be there, but I have a feeling that we will be there. And then the principal and part of the resources of the leverage will go to certain topics, for example, climate change. So very interesting concept, and talking about the power of leverage, as we have talked about the power of principal protection in the outcome bonds as well. We still have a little bit of time, so I would like to ask you about the future. So I will invite all of you to think about this one, but name one thing that you wish to happen now that would catalyze capital markets to scale up climate finance for developing countries. And, maybe we can start with you, Kitty.
We were talking about a leverage of 1 to 3, so I'm going to throw out 3 instead of 1. So one was the cat bonds that you mentioned. I think there's a huge potential as climate disasters are increasing to scale this up and to work with us. I think another opportunity really to leverage is looking at the debt situation and debt distress. I mean, of low and middle income countries, we know that 1 in 5 countries now pay more in external debt service than they pay in health, education, and child protection combined. How can you ever achieve the SDGs if that's the situation? So debt rescheduling, and we have done a ton of debt for nature swaps. We can do debt for children swaps. Invest those resources, for example, in nutritious school meals. So you improve the retention, you improve the health outcomes. We can just do that. It's just a matter of thinking in a different way. The other thing I've been thinking about, why can't we issue emission reduction linked bonds where the carbon credits are monetized, for example, donated to UNICEF, so we can invest them in resilience for children? All of these things can be done. They're happening, but they're not at scale. They're way too small. And so with the power of the innovation that we bring together and leveraging the private sector, I think we can make big change happen. So just 3 ideas, but I think we have a busy agenda for the next few weeks.
You're giving me homework.
Absolutely.
Kampeta.
I would say 2 things. One is a few decades ago, the national development banks were dirty words. I think this has changed dramatically. And in many of our countries, national development banks are actually the secret weapon to make sure that we achieve scale on the ground. And this is the time. This is the time when we work with our national development banks, the same way your team, did with us, with a bit of a leap of faith, and use them to convert their own balance sheet and also to convert the local financial institution into this very important agenda of sustainability. And then my second point was something that was raised yesterday by President Macron, which is really the issue of pricing. What we loved about the innovation is that it addressed the issue of pricing for the investor, but also for the borrowers, which are our clients at the end of the day. And if we want to incentivize the private sector, in all countries where interest rates run as high as 18%, being able to bring it down to 12%, as we've done through the sustainability-linked bond, is transformational. So if we don't speak about pricing when we have these conversations about access to capital markets, I think we're missing a big point for low-income countries. And then one last thing that I forgot to say is one of the key, I would say, positive benefits of taking this approach is from the time we did ideation with the country team to the time we listed on the stock exchange, it took us 9 months. Which 9 months, I think, in the speed of development banks is like the equivalent of 2 minutes. So also there's a benefit when we serve the private sector, if you want to be relevant to the private sector, to also keep timing in mind. So yes, those would be my things. Timing and speed, yes. Thank you.
Thank you so much, Kampeta. Asbjørn.
Yeah, and I guess as a representative of private sector capital, I guess my answer is very easy. We have capital to deploy, and we'd like to see more supply of very good investments. We think these kind of structures are really interesting. We are focused on the real impact or the additionality that we can try to achieve and try to increase the quality of our portfolio and increase the impact per dollar we actually invest. So that's I think it's about scaling this. That's key for us.
Alexia.
I'm going to use all my energy and all my minutes on one homework assignment because I feel so strongly about it, and then I may make an observation. So my one homework assignment is really about what I just discussed, which is the CIF's capital market mechanism. I think the power of the CIF being able to issue bonds and expand the funding sources to therefore expand the programming is just absolutely transformational. And so I know you've been working so hard. I'm so grateful to you, your team, the CIF team. I know it's complex because there's lots of different actors, the donors, the secretariat, So next year at COP, I want us to be celebrating the fact that the bond has been issued and this is working. So that's my homework assignment. And then my observation will be the following. And Kampeta talked about pricing. And we hear over and over from countries that pricing is important. We know that for some parts of the work that they need to do, concessionality will become very important. And in the context of the work we're doing with MDBs and evolution, we know that we need more concessionality in the system. And these multilateral climate funds, like the CIFs, are a source of concessionality. Are we leveraging that concessionality with the speed, the ease, the efficiency, the effectiveness that we can be? I think not yet. There is a margin for better work there. And so I'm very eager to work with all the partners here to really make sure we don't leave any of that margin on the table.
Thank you so much, Alexia. So I'm leaving this panel with more homework that I thought I would get, which I think is great. I will try to summarize this discussion, but from my perspective, the World Bank has 70 years of capital markets experience, and you all have our commitment to work with you to further and strengthen this link between capital markets and sustainable development. We will continue, taking advantage of this, set of partnerships to build stronger links between capital markets and sustainable development. The second one, and I think it's the most important conclusion, is precisely the power and force of partnerships, right? It's not the World Bank doing things on its own. It is working with UNICEF. It is working with Rwanda in innovating and moving the frontier, and it is working with investors to make things like this happen. And of course, the drive and the impulse that we have received and the support that we have received from our shareholders. And Alexia, I think that you represent our shareholders incredibly well here. We would not be where we are in terms of innovation if it wasn't for this support and this very important push. Lots of space to continue working together. We talked about the power of leverage, and I think that we need to take full advantage of this. Again, very efficient private capital mobilization engine that was created 70 years ago with the World Bank. Small capital base, enormous mobilization. Today, we are refining that machine. We are making it leaner and meaner, and I think that that is going to be very positive for emerging and developing countries. And then, the power of principal protection, right? When investors know that their principal is safe, they will be willing to take more risks. And this is important to foster, innovation and to move the needle again on sustainable development. This is what I have as conclusion. I would like to thank our panelists. Thank you so much for sharing this valuable experience. And thanks to all of you for being here with us today.
Thank you.